or 3 weeks, yeah, 2 weeks. That's on perfect entries, holy entries. We are going to talk about, do a short revision about the consolidation and market looking for gathering strengths, either buy or sell. And lastly, I'm going to teach something new. Definitely, you might have all noticed there is something new on my chat, which will now help us to get more accurate in the signals we will in the future call for ourselves. Firstly, I have some questions, and it's always good if we can. It's always good to participate during classes so that your brain is active and you can keep the stuff way better in your mind than usual. So the question now is, for those who have been attending classes regularly for some weeks now and have been trading with us, what can you say about perfect entries? What can you say about holy entries? There are so many of us that are new, so I just want to see how the old students have been doing. Just feel free to unmute your microphone and speak.
Prof, what do you mean is, do you mean for the person to explain how it works, or just a global view of what you mean by perfect and holy entry? Hello?
Sorry, yes. I mean, since it's not that much and since it's something just very small but very accurate, just tell us what you just understand by holy entry, what you understand by perfect entry for those who are new. So they might have an idea of it in case they have watched the old videos, or in case they haven't watched the old videos. Let's just see how the knowledge is going.
Okay, so I'll just recap on what I've been doing for the past 2 weeks on my demo as practice. So basically, I start with, from what Prof has been teaching in the previous classes, you start with a 1 minute chart first. You go to the 1 minute chart. On the 1 minute chart, a perfect entry is when, it depends whether it's a buy or a sell. If the chart is overbought, it means the perfect entry will be on the 80, and the holy entry will be slightly. There's a lot of noise. Hello?
Yeah, who are those talking? Let me see. Please, if you're not talking right now, you can just mute your microphone and let one person speak. Yeah. Yeah, Felix, you can speak.
Okay, so when the chart is overbought, the perfect entry is when the RSI is at 80, and if it's then the holy entry is when it's above 80. At that point, the chart tells you not to buy. It doesn't tell you not to sell either, but it tells you at this point, do not buy. So if you want to proceed to check whether you have to sell or not, you go to the 5 minute chart. If the 5 minute chart is also overbought, then you go to the 15 minutes chart. If the 15 minutes chart is overbought, so if the 1, the 5, and the 15 minute chart are overbought, that is, are they on 80 or are they across the 80 on the RSI? What Prof is having on his chart there, you see the upper band is 80 and the down band is 20. So in the opposite direction, if it's on 20, which is down, so it means that it is perfect entry. But if it's below 20, right down below 20, then it means it's holy entry. So, but that tells you that do not, the thing has oversold, so do not sell again, but it doesn't tell you to buy. So how will you confirm if you want to buy or not? You go to the 5 minutes chart and check, is this still oversold at this point? You see, yes, it's touching the 20, so it means that it is a perfect entry. It's not holy because it has not crossed the 20. Then now you go to the 15 minutes chart and check there as well. Is it there? Yes, at that point it is. So now you can place your sell at that point, and you see from the chart, you see that it actually sold at that point. So basically that's it. But Prof used to tell us that when you get to that point, you put your vertical and your horizontal line. The first one, you put your vertical line at that point, which is oversold or overbought. Where what Prof is actually doing right now. So you put your vertical line there, and then once your vertical line is there, then you put your horizontal line after the candle. That when the candle closes, if it's bought, it will close above. If it's sold, it's going to close below.
So what Felix is basically saying is, in a short run for everyone, since we have a lot of newcomers today, is when you have your chart like this and you are analyzing, we wait for the perfect and the holy entries. That's the first technique we did. The perfect and the holy entry means we wait for markets to reach a point whereby it has either overbought or it has either oversold. And in case the market has overbought, we are not looking anymore to buy because something has been overdone. And in case the market is oversold, we don't want to sell again because the market has too much sold or oversold in that case. So to identify market spots, if they are overbought or not, is when we get in, we should just mute. Yeah. To identify market spots that are overbought or oversold, you need the RSI, the relative strength index. For those who don't have it, in the previous videos, you can always figure out how that is being done. Shortly, you just actually need to click on the indicators and you type RSI, you choose the relative strength index, and that will be it. And then when that's done, you can, in the settings, put on the style your upper band to 80, your lower band to 20. A spot which is overbought is basically this place over here, the 80s. Let me zoom out. Yeah, this is the 80, our upper band. This is the 20, our lower band. This area is what we call oversold. This area, sorry, let me do it way better. I can do that better. This area, the 20 line is the perfect entry. The 80 is the perfect entry. And it is the overbought area over here, the oversold area over here. Then above the 80s, this area is what we call the holy entry. And below the 20s, this is what we call the holy entry as well. This is the holy entry for Jesus, this thing is not. Let me delete this and zoom this up. This is the holy entry for we'll do it way better than this. Oh, sorry. This delete. Yeah. This is the holy entry for a buy, and this is the holy entry for a sell. Means the market is down here on the RSI, not on the chart. The chart has nothing to do with it. On the RSI, when market touches the 20, we know it is a perfect entry for a buy. It does not mean we should buy. It's just a perfect entry. When market has reached the 80, it is a perfect entry for a sell. Perfect for a buy. But we don't get into the market immediately. The first thing we do when market reaches those points is we want to confirm how accurate this entry is right now at the moment. So the first thing we do is we place a vertical line where the market actually shows us or tells us that we are oversold. In this case, this was the first. And when we've done that, since we are on a 1 minute time frame, it means each candle takes 1 minute to occur, meaning we are looking at the market and analyzing just the next few minutes, not the next 5 or 15 minutes. But to be aware of the fact that, okay, good, we want to stay in this market for a little bit longer and know how far we are going to be in this market to profit, we need to go on a higher time frame. The first is the 5 minutes time frame, and we go back to where we placed our vertical line, and we see that also on the vertical line, the market seems to have oversold as well. That being said, that is good actually, because at this moment, I would expect that I could enter the market right now, and latest in 15 minutes time, I am out because I have not confirmed the 15 minutes time frame yet. So in case I am getting into the market at this point in time, I am not staying inside for longer than 15 minutes. So see what happens. You got into the market here at this candle, right? And this each candle needs 5 minutes. You get in at this point here. Let's just assume you waited for this candle to finish, even though sometimes I enter when, as far as I'm confirmed there. This is XPS 500. How many pips are this? This is close to 70 pips, 60 pips, and it went up to 70 pips. So we see that this technique is actually an accurate technique to give you some few pips very, very fast and very, very short, right? Use this, and use this. It's very simple. Even though you're new, you can rewatch this video and rewatch this video again. This is just an example for a sell, for a buy. An example for a sell would be here. Let's just take this as an example. We go now back on the 1 minute time frame because we always check from the lowest and we start going to the highest. So what happened here in the market at this point in time on the 1 minute time frame? This happened, right? So on the 1 minute time frame, we see that the market is overbought at this point in time. So what do we do? Getting into the market at this point, we're expecting to stay in the market for how long? Highest 2 minutes, because there is a 3 minutes time frame. So getting into this market here to sell, we're expecting to get into the market for highest 2 minutes. But do we get into the market because the 1 minute time frame tells us that we've overbought? No. We go to the 5 minutes time frame and check, oh, how is the market looking like? Damn. Okay, this is where we are. On the 5 minutes time frame, the market tells us we have not overbought yet on the 5 minutes time frame. Here are we, right? So what does that tell us? It tells us that in 5 minutes time, even though on a 1 minute time frame, the market is overbought, in 5 minutes time, it could still buy. Meaning on a 1 minute time frame, it could sell shortly, but buy in general. So you don't get into the market because the 5 minutes time frame tells you the market still has space. That being said, you go back on your 1 minute time frame and you wait for the next, let me remove this because we're done with this. You wait for the next confirmation of the next entry. That being said, you find yourself around this point in time, around the holy entry, or let's say we wait, market drops and comes to the holy entry. We see that we are above the 20s, right? I mean, the index right here is above the 80s. So we find ourselves around the holy zone. That is to get some good and holy pips. So what is the next step? Basically, sometimes I always tell the students to place a horizontal line here to check previous market structures, but that is only when all the confirmations are good and you're thinking of getting into the market. So you go to the 5 minutes time frame to check what's going on in 5 minutes or what could happen in 5 minutes, since we noticed that, okay, good, last time we should not sell. Here as well, we notice on the 5 minutes time frame, there is just little space. And what do I always say? If the market is not perfect to the fingertips, we do not enter. Very good. You all said it and ready. This being said, this little space is enough for us. Just look at this. Look at this, guys. We are entering into the market here. You could get this, right? And risk this. Risk ratio is, I think this is 1 to, I don't know, maybe 20. But we still don't get there. We wait for it to be as good as possible. That is why we notice here that we are not overbought. We still wait. That means we are going back to the 1 minute time frame and wait for the next possible touch. We notice that the market dropped down. Yes, it did, and touched the 80s one more time at this level, right? Am I wrong? Am I right? Yes, we notice that the market touched the 80s one more time here. So that being said, you guys know we want to know what is going to happen in the next 5 minutes. We zoom out and we notice that, okay, good, we are almost there, right? That being said, if you actually check here really good, you notice we are just around 78. I will not send the trade at 78. If the market turns here and sells good and fine, then we miss the trade, but I will not send it at 78. I will wait till it gets to the 80s. So that being said, I wait again one more time and I focus on this chart because I notice something is getting hot. That being said, I wait one more time and notice that great on the 1 minute time frame, we are on gold. The market comes down to this point in time. We see it. I think this is now 80. So that being said, one more time, you go to your 5 minute time frame. And I notice on the 5 minute time frame, okay, good and fine, we are not still there. So that being said, you just wait one more time, you keep waiting, keep waiting, keep waiting. You could enter the market at that moment in time, but you know what you will be risking. Already showed that. So that being said, if you have any questions, feel free to interrupt. So we notice that the market stayed here, right? We notice this is one candle, means after like a minute we've waited. So what is happening then on a 5 minutes time frame? You see that it's a lot of work, but gives you accuracy. Please, guys, please. Please, Bonnie, can you? Bonnie, yeah, thank you. So that being said, the more we wait, we notice that the market will somewhere in the future that, okay, I think you want to say I'm sorry, right? But it's fine. Probably a message in the group you said sometimes. Should you wait for the RSI to cross? Please just unmute your microphone and explain what you mean now. So that being said, the moment we notice on a 5 minutes time frame, we are also perfect and almost holy, right? For me, on a 5 minutes time frame, you can feel free to get into the market at this point in time. Feel free to get into the market because entering into the market on a 5 minutes time frame, you are expecting to stay inside maximum 15 minutes. You should be in profit, right? You should be in profit in maximum 15 minutes. And guess what happens? See this, we're on a 5 minutes time frame and we notice we are overbought, sorry. This is close to 33 pips, right? 33 pips, you must have taken partials and noticing that that's just, that's good 30 pips you could collect from this trade. This technique I am teaching is not the technique I use to call the trades. That should be understood. As I said earlier on in the group today morning, I have developed 4 strategies, 2 minor and 2 major. The 2 minor are 2 minors that could be combined together to enhance, to make one strategy, which is what I'm trying to do at the moment. And the more, when you combine it plus the third I'm working on at the moment, makes this technique more accurate. So if we see that we combine the perfect entry and holy entry, additionally to step 2, the second topic we did was consolidation and market direction. So assume that market stays on the perfect entry or on the perfect entry or below here for a while and finds itself consolidating. We have that some multiple times. For example, here today on gold. let me reduce this, expand this to the support. I talked about consolidation. Market is consolidating. Today's a bad day, so there's a lot of, okay. This is a market is consolidating. The RSI is likely dropping. What does that mean? Market is looking to buy here. So for those who are new, if you combine the perfect and holy entry with consolidation, that means in case market is overbought and is oversold and market stays on that area, which is what happened today with USD. Yeah, I could show that on USD. It actually happened. It's a trade I sent. Sorry, guys, you have to see this. Okay, this is it. Okay, we'll go on a 1 minute time frame. Okay, we notice that today is really poor here somehow. Market is at this point in time almost consolidating at the same price level, right? Between, let's say, here till here. Market is almost at the same price level, but we can clearly see that the RSI is likely dropping. So the algorithm is, if market is consolidating and the RSI is dropping, market is preparing to buy. Market is preparing to buy. If the chart is consolidating and the RSI is increasing, market is looking to sell. As simple as that. The stuffs are in the group R and also in the old videos. You can kindly watch them. So conclusion, we've done perfect and holy entries, combined them with consolidation, and which tells us the market direction, right? The perfect and holy entry tells us when to get into the market. Consolidation tells us in which direction the market is going to go to. Any questions to that before we get into what's new?
Oh, there's a question typed.
Yo, give it.
Someone typed a question that he messaged in the group that we have to wait for the RSI to cross back in the overbought oversold to confirm. You said we were going to talk about it during the next class.
That's I really don't understand the question. Like, can you explain it?
From my understanding, what the person means is that you have to wait until when it crosses the holy entry, when it exits, when it's coming down, that's when you buy. Exactly, that's when you buy. That you don't buy when it is in the holy section. I guess that's what the person means. I don't know.
Okay, in that case, I really can't recall myself saying that because I would not teach that. If I said that, then I'm sorry, but you don't wait.
Prof, the person did not say you said it. From the group, the person said that he heard from another place, so he was confirming with you.
Okay, good. That's the thing. The moment you understand this, right? The moment you understand what we've just done on the RSI, you can just think, like I can imagine what that trader was thinking of doing. The person noticed, okay, the market has overbought. So what the person is doing is, in this case, for example, like here, in this case, for example, like here, the person might, we are overbought at this candle, isn't it? Even at this candle, we are overbought. So the person is like, okay, good. Let me wait for the RSI to enter back. Then I sell, isn't it? That would be the idea. Then I sell, but it will kill you. Look at this. It will kill you. That is why the holy entry, right? The holy entry is meant for you to know when you're getting in. You don't wait for it to come back. You actually enter here. You actually enter here. And when you are in here, let's assume this candle. When you are in here, you enter, you collect this. Is this true? 100 pips. This should be 100 pips on US 30. And that being said, on this day, we know that there's a lot of fundamental stuffs going on, so you cannot really rely on the chart. This is a day you couldn't rely on the chart. So showing this example here on the chart is actually not that good. But what I think that trader is doing is waiting for market to start selling before you get into the sell. You get it? There are some people who might see a buy, but they wouldn't enter at that moment that the market buys, but will wait for the market to actually start buying and say, oh, okay, good, the market is buying, then I'm going to just enter with the flow. But that's not what we do. We already take from the first pip and we move forward. That is why most of the time the trades, when I send them, not always, but most of the time, if you take them 20 seconds later, we are almost somewhere else. You just see me writing plus. I don't know how many pips in profit. Is that, I don't know if I've explained. Okay, I think this is yes. So, in your, come again. Okay.
Yeah.
Okay, good.
I have one. You were saying like in another video that you have to times it by 3. I didn't understand that times it by 3.
Times it by 3.
Like if it's 1 minute time frame,
Exactly.
you're expecting to take the trade by 3 minutes.
Exactly. What I said, for example, if this is a one, analyzing the chart on a 1 minute time frame, right? We're expecting to stay in this chart, in this signal for maximum 3 minutes. That's why I said times 3. You get it? If you are in the chart, if you're analyzing the chart, I don't analyze the chart on the 3 minutes time frame, I don't, but 1, 5, 15. If you're in a chart on the 15 minutes, on the 5 minutes time frame, you are expecting to stay in, or you can only see the market's flow. You can mostly averagely see the market flow till how it's going to be in the next 15 minutes. That's also times 3. First, when you go now on a 15 minutes time frame or 45 minutes time frame, I don't analyze indices on 15 minutes time frame. I only confirm on 15 minutes time frame. That's why whatever we analyze on the 1 and 15 minutes time frame, we should be thinking of times 3 of what we are doing right now to happen. Like if we are calculating on this candle, which is forming at the moment, we should think of 3 candlesticks. We should be in profit. At latest, in the 3rd candle, we should actually be in profit. If not, then there is something wrong in the analysis. That's why I said times 3. Yeah. Okay, good. Any other questions? These were all just repetition to what we've been doing the past 2 weeks. We also did the Fibonacci trend extension, the trend-based Fibonacci extension, which is just a tool to just place and you see where the market is going. So I saw some good examples today, but that's also found that's also found in the old videos, and it's really easy to use. Here, just one example, trend-based Fibonacci extension. For a sell, your first point should be a low, a high, then you go to a low. The next low is this low right here, but I just extended. Yes. And this area from 1 to this area would be your sell, would be your entry to sell. Okay, good. So what's new today? Is everything understood before we go into what's new today?
Yes, Prof.
Okay,
Well
good.
understood. Thank you.
Okay. If something is not understood, just go back to the old videos. Since it's repetition, just go back to the old videos and stuff. So that being said, now I need you all to pay attention and think. If you know where your entry is, if you know where your entry is, an accurate entry is, right? If you know that, here and here, for example, you know where your entry is, you know how to find direction of the market, consolidation, consolidation, market dropping, or consolidation, market climbing. The next question is, and then you are getting the market direction. So now the next question is, the next good issue that one could know to get more accurate in trading, what could it be? Just think for yourself. And if you have something you just said, if you know when to get into the market, you know which direction the market might take, what could be the next thing you're waiting for?
Volatility.
Exactly. Exactly. That is it. When does it make sense to get into the market? Does it make sense to get into the market to trade this? No. According to me, no. You get it. Does it make sense to go into the market to trade this? Yes, it does. This, I won't trade this. I won't also trade this, depending on whatever we're doing. So the question on is, when do we find areas in the market when the market is about to explode? Either, right, either for a sell or for a buy. For that, we need what we call, I hope I get it here. Let me see. ADX. ADX. Since this is new, I'm going to take it gently, right? I need the exact name. That is average. Just type this on your chat. Average directional movement. Yeah, we take this one. Let me check. No, it's not this. Average. No. Okay, this is it. This one. So when you type average directional, you leave it there and you take the first one by Robert Kowalski. I went and clicked on his name. Here. That is it. One click and you have this. Okay, just a click, you have this. So mine is actually not edited and I just want to edit it because it doesn't look good. Your settings, right? Make sure your input is 14 on 14 for the main time, and your style, which is default, by default, you have it like this. You wouldn't change anything, just that I would like to put this white because I have a dark screen. The color you put actually doesn't matter. You just have to know which one is the ADX, which one is the DI plus, and which one is the DI minus. The DI plus, I will want to put it blue because it indicates this is the buy. It indicates a buy, so I'll put it light blue. And the D, I'm going to leave it red because it indicates a sell. So that being said, when we have this, right, there's actually a way to put some bands, but I've not figured out yet how that goes. But this is the point. Whenever you find yourself in a chat, right, like today, the signal I sent, today's a really poor day to give technical analysis. So let's go back because there's a lot happening in the market. Okay, good. This is the point. Your horizontal line, take a horizontal line and place it around the 20s of this. For us to have a clear, let me do, we don't need that, we need this. Good. And I'm going to zoom in a little. Good. So we need a line around your around your 20s. You need another line around your 40s. And you need the third on your 60s. I'm going to remove the RSI. The RSI is gone. That being said, we have it like this so we could have a good view. Oh God. Where auntie? Okay, good. So now listen carefully. It could be a little bit technical. The white line you see here, I know it's a little bit so, I don't know, rough, but this white line you see here, right, is what is going to tell you when there's liquidity in the market. We still need to get the settings right, but when you see the white below, today is a really, let me make sure we are not on today. Okay. When you see the white line around the 20s, we can see that it is here on the 20s, here on the 20s. You guys know what? I'm going to do this with vertical lines so we can actually, this is one, right? This is another, this is another. Okay, this area over here from here to here. From here, 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 to here. I'm sorry when it looks like this, but we just have to understand. So actually, we are observing this line. This is the line we are observing, right? And also, this area is the area we are observing. So we should notice that whenever the white hits the 20 or comes around the 20, it tells you that market is about to explode, either for a buy or for a sell. So at that moment in time, wherever the market is, be aware of the fact that the market is going to take a drastic movement for a very long time. Let's go back to somewhere where the market looks okay. Okay, just look at this. Market is already out. It's coming out. Here it's coming out. Here is okay. There is okay. There is okay. Also, here, you guys look at this spot to this spot. Let me leave this. Let me leave this here. Let me keep that here. Okay, so we see its accuracy. Observe this. Observe this. This is the first line we put, right? Market at this point in time, we should be thinking that good. The white line has crossed the 20s and it is below. Therefore, market is looking to either buy strongly or sell strongly. We just know that at this point in time, keep your eyes in the market. Keep your eyes on this chart at this moment. For us now to be able to know the market direction, what do? We check the consolidation. We just say, thank God, market is consolidating here, isn't it? Right? So if market is consolidating here, what do we need at this moment to know if market is
Go to the sitting room and stop disturbing me.
At this point in time, if we know that there is liquidity at this point and there is a consolidation at this point, what is the next step? We want to know the direction where the market is going to, isn't it? So what do we need? The RSI. Great. So sorry, I removed it. Let me put the RSI. Let's see if the RSI is going to work with us. at this point in time. So, okay, good. This is really not that clear, but I just hope we can follow up, expand this. We all know it consolidated here and bought. So if here we are, right? So let's zoom in. See where market was. This is the point we notice the white line has touched the 20 and the consolidation is taking place. We notice market is consolidating and it's doing what? I think everybody can actually tell that this is dropping from here to here. Market has dropped. Gets it? So at this point in time, when do you actually know when to buy? Isn't it? When do you buy? Look at this. Market drops and drops and drops. So you already know that one thing, there is liquidity. Second thing, market is preparing to buy. So the third thing is just, when do I buy? Good and fine. We have never talked about entering the market in the normal zone. But this is why we need to take the studies further. We cannot stay for 3 weeks doing just, I think there is a question, doing just one thing. Others want to move forward. Your RSI is on 70. Oh, thank you so much. Thank you so much. The RSI is on 70. I just arranged it, but the RSI stays the same. It's just this line which is going to expand, it shouldn't confuse you. So one thing is, there is liquidity in the market. The RSI, I actually have that somewhere written, so we see it. I hope the right page opens. Good. Here. If the market, this is the chart, excuse me, it's really poor drawing, but this is the chart and this is the RSI. If the chart is consolidating here, it dropped, came up and consolidated. The RSI dropped as well, came up, and while it was consolidating, the RSI was dropping. What does that mean? We go up here to the blue. Chart consolidating plus RSI drop, market's preparing to buy. If the chart drops and consolidates, or buys and consolidates, but the RSI during the consolidation is increasing, it means market is preparing to sell, because market is always preparing to do the opposite of the RSI. That being said, we know that at this point in time, the RSI is dropping. RSI is dropping, so market is preparing to buy. So we now know that. Good and fine. Let me delete now everything, because we now know the direction of the market and everything. Market is preparing to buy, right? At this point in time, what was the next question? This area is where we know market is preparing to buy. Now, also listen. We have learned also about forces in the market. Buyers in power, sellers in power. It's also in the old class videos or lessons. So watch that. If you haven't, you are going to be lost already by now, though. But others should not suffer from that. When you look at this, you notice that the yellow line is above the red. Buyers in power, right? The best case scenario now here is to wait for a pullback. If your account is large, you could already enter here. If you understand this right now, if you have a huge account, you could already do this. Gets it? You run shortly in profit, you notice that the market is consolidating. Good and fine. You check your other stuffs. Market is consolidating, but the liquidity is still there. It means it has not exploded yet, and the RSI is dropping. Good and fine. I stay and wait for the buy. You get it? But in that case, if that's not the case for you, you wait till you find this spot. You look for a candle. You look for two candles, whereby the red candle and the blue candle are next to each other. Secondly, the red line here crosses through both candles. or below both candles, or the red line should even cross at least through one of the candles. Best case scenario is when the red line cuts through both candle bodies, or in best case scenario is when a DeLorean actually occurs for a buy. But if a DeLorean does not occur for a buy, the DeLorean is actually the strategy. If you have this RMI, this MAs on your chart, and you notice and you actually see this is actually a DeLorean for a buy. So this is what you should have maybe waited for and then buy. But if this does not happen, you could also look for different places. First things, look for two candles. It must not be red, it must not be blue. It must not be the opposite, it could still be the same. But what you should notice is the blue candle, the buy candle, should always be greater than the previous one. For example, here. The buy candle is greater than this. 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 When that has occurred, make sure your aqua line, right, is not too far away from both candle bodies. Meaning if the aqua line, this aqua line was here, you should be aware of the fact that the market could drop to the aqua line first before it pulls back up. That being said, best case scenario is when the chart or market price actually hits the aqua line. So anywhere around the aqua line should be your entry point. I know it's complicated. I know it's just pay attention, take it easy. You ask your questions, you will watch it. I know it's a little bit tricky. That being said, right, I've repeated all over again. Let me repeat everything all over again. How can I delete this fast? Can I just do like this? Yeah. We notice that this is the area where we are going to find our liquidity. Or in other words, we actually don't know how long this place is going to take. So we don't actually know that this line is going to be there because this has not happened yet. Great, right? So that being said, we wait at this point. We check for two candles whereby the oldest candle, which is the right candle, is a buy. First of all, these two candles, this candle is a buy. Two candles, this candle is a buy and is bigger than the sell candle. This candle, these two, this candle is a buy, this is a sell because it's red, this is blue, and it's stronger than this. This one here also, two candles, the buy is stronger than this. That's your first confirmation. Second confirmation is when buyers are in power. It's simple, it's simple theory, right? Buyers are in power, meaning the yellow line is above the red. So here, buyers are in power. And that being said, at this point in time, you should have felt free. Here, don't get in because this is a really, really good consolidation. Like the yellow line and the red are almost on the same place. So you should just stay away from the market a little. You see that sellers came in power here, and then you now have the buyers came in power at this time. So latest at this time, you see it, this should be your entry. Because first, right, two candles that whereby the right candle is a buy and is larger than the previous candle. That is your first confirmation. In that case, you should have had this here at the moment, and also the yellow line is above the red. You could have entered here, but let's assume you missed this one and the market sells one more time. This you won't have done. You won't have done. Okay, here you notice, okay, this buy candle is larger than this candle as well. But the yellow and red line are almost on the same place. So you wait, you keep waiting, you keep waiting, you keep waiting. Okay, here as well, the blue is larger than the red and the yellow is actually away from the red a little. You should have entered, you could have entered it, but sometimes I like when the difference is really clear. I like when the difference is really clear. So latest around here, or latest, guys, latest here, you should have entered. questions till this moment. I have to assume it's a bit complicated. I took time to figure this out. I know there should be questions. So we've looked for liquidity below the 20s or from the 20s. We've analyzed the direction of the market, and now we are just waiting for the entry. Maybe someone is writing. What's an engulfing candle?
Prof, from my understanding, engulfing candle is when the candle completely swallows the preceding candle, like where you have that circle, right? The green candle engulfs, like swallows the entire red candle. That's when you said this is a bullish engulfing. So it shows that the market is actually going up.
Yeah, you can. Yeah, that's a higher. That's just what I would say. For example, your accuracy is getting higher and higher, because I know that DeLorean, Patrick, and Tyrone, they would also trade. They would trade something like. They would trade something like this in case the red was almost the same level with the blue or with the green. But if the green is a little bit bigger than the red, they will trade it. As I know Patrick, he would trade that. But that being said, if the buy candle is way larger than the red, it just tells you more that the buyers are really in power. You get to. So I always say, as I always say, right, don't cram it. Try to understand it. Because the moment you understand it, you might even see more than what I'm saying. Because that's just all what I do. All what I teach you guys is what I found out. One thing I learned from IML was the DeLorean, but just 4 steps. Step 1, step 2, step 3, step 4. Even a class 1-year-old child can actually do that. But understand what the candle means, understand what the lines mean, what the moving averages mean, and understand what the RSI does when it's there. When you understand all that, you can manufacture your own strategy. I know there are definitely questions, and I am ready to answer them now. I know they are before I continue. No, there must not always be a DeLorean coming out. A DeLorean might come out, but there must not always be. It's just lucky that the DeLorean came out at this moment. This is a 5 minutes. If we go to a 1 minute time frame, it's not going to be the case. It's not going to be a DeLorean. Some people are lost, like, what's the DeLorean, right? Where is the market? Jesus, where's the market? Okay, yeah. That being said, see, this is not a DeLorean, but it's still the same scenario. You see, same scenario.
I'm busy doing something. What's wrong with you people now?
No questions. Really, no questions.
Prof, it's really really not a question. I just wanted to clarify something. Because from the DeLorean where you said, I also took some time out to study that, and I'm seeing that at the point where you said that Patrick could trade, where you have the green and the red, right?
Yeah.
At that point in time, if you want to take that trade, do you take into consideration the yellow and the red? You have to make sure, because since the DeLorean is not caught at that point, you have to make sure that the yellow and the red actually touch the candle or a little below the candle.
Good question. And that question is actually, we can actually put the question on this time frame, on the 1 minute time frame. We notice that the aqua line is actually not there because, as I said, the best case scenario is when market pulls back and drops to the aqua line, because if you enter here, you should calculate that market might pull back down to the aqua line before actually buying. So you should be able to calculate your account balance if your account balance could handle 1,600 pips, right? So In that case now, this is what we'll do. I actually already explained it, but I know it's not that simple. So we just understand the lines and what they do. What does it mean for buyers to be in power? We need the flip. I once talked about the flip, right? The flip is when the yellow line crosses the red line, no matter which direction. The yellow might be coming down and the red going up. This is a flip. Or the yellow might be going up and the red coming down. This is the red is the circle. This is also a flip. In this case, the yellow coming down, sellers are getting in power. In this case, buyers are getting in power. So the best case scenario to get into the market is when buyers are in power. And also, first thing said, you look for your two candles, whereby the second candle is a buy and it's larger than the other. Let's say this one, this will be your first, right? This will be your first. In this case, this is a really good example. Would you enter into the market at this point? Because it's actually where you analyzed. And let's say you waited for this candle to finish before you want to get into it. So this candle is actually forming at the moment while the red is here and the blue is here. So just answer the question for yourself. Would you get into the market at that time? You can all write in the chat to avoid noise. Exactly. No, you won't. And why not?
Because the green candle is smaller than the red candle.
Exactly, as simple as that. So you wait for this candle which is forming to finish forming. That being said, when it finished forming, you now analyze these two candles, right? And do you get into the chart? No, because this candle is way smaller than this candle. So you wait again and you see these two. Will you still enter into the chart? No, because they're almost the same size. I don't even know which one is larger than the next. Even though buyers are in power, the yellow is above the red. That being said, I wait for the flip. The flip happens. And actually, when the flip happens for a sell, you now wait for the pullback. That's actually the best place to get into it because that's a technique. I just hope someone would have maybe figured it out. So you see that the flip happens, seller came in power and the sold, and you notice, oh, this candle forming is actually a blue candle, and this one is a red candle. Just look at it. You now wait for this one to finish since you are seeing this candle forming and it's going for a buy, it's going for a buy, it's going for a buy, and it actually forms at this moment, right? You wait, you notice that, okay, good, things are moving well. Even though you are under a flip, this will be an advanced entry. You just wait and hope market stays like this. You might not wait and notice that, good, the flip happens here again. So point one, this candle is now bigger than this because when the flip happens, this candle is still forming. When this candle finishes forming, this candle starts forming, right? We are on a consolidation, so we should definitely have this move. It is okay, it's fine. So latest around this point in time, you're going to get into the market because this candle here is larger than this candle. And that is the first point. And secondly, the yellow line is above the red. That being said, you should have got into your trade here. So people would have been crying, oh, red, oh, red, oh, red, oh, red, oh, red, oh, red, oh, red. Oh. But as this market is consolidating, you keep checking your RSI, you keep checking what's happening. And we all know that great latest at this point in time is when we explode, right? This is when latest at this point. Yeah, at this point, why is this showing exactly? Let me remove this because we all know what that means. At this point, latest, we are in the market. Latest here, we are in the market. Any other scenario? And is that explained? So if the delirium does not occur, good and fine. You check your two steps. Who is in power? Is the buying candle larger than the one before? This is beautiful. This is so good. It's good. If you notice, you might not have definitely there's no strategy which is 100% accurate. Even the one I used to call the trades that I have not taught, right? It's not 100% accurate, but we have been having a success, good and fine. But the goal is to get as accurate as possible. You just keep adding clauses and clauses and clauses to get as accurate as possible. Questions? Should I do examples again? People are just quiet. Everybody's just quiet. Okay, let's look at this. Just look at this. This is even a trade idea. What's happening here? Consolidation, right? Let me make this clear. We can actually say the market is consolidating at this point because market is almost staying at the same point. We get it. Market is always almost at the same point. This is it. When market is consolidating, right? Is there liquidity? This is the white. Is there liquidity in the market? Yes, there is liquidity in the market. Market is consolidating at this point. What's happening with the RSI?
It was increasing.
Let's see. Okay, consolidation started here. RSI is also very stupid. It's also very stupid. So at this point in time, you just stay out of the market because you don't know where you just wait for the RSI to be clear as possible because we know something is going to happen. Something is going to happen. And if you take the wrong decision right now, you lose a lot of money. If you take the right one, you make a lot of money. So at this point in time, we could now remove, I'm going to put that back. We could now remove that because we know, okay, good. At this point, we know there is liquidity, right? So we keep checking, and we'll just keep checking. Right now, what we use, this looks like a strong sell, Looks like it. There's another strategy that I have in my mind, which tells me this could be a good sell, but not too much anymore. Highest till this point. That being said, this is not a trade that I'm going to give because it's not good enough for us because this is still a consolidation point, consolidation point, and it looks like support and resistance right now. This is good. So you gotta look at this. This is the resistance here. We just make this thicker, and this is the support at this level, right? So what is market doing? Market is respecting itself. So guess what's going to happen right now? And keeps playing like that till we know the direction of the market. Till we know the direction of the market. You see. I know there should be questions, right? But if there are not, good, just practice it. If we are still thinking of maybe, I don't know, something is wrong, or I'm not still getting everything clear, maybe I have to rewatch the videos. If you're not getting this clear, definitely, if you have not understood anything, then it's because you maybe lack the knowledge on the RSI, which I found in the pin messages, and you also lack the knowledge about the consolidation. You can also find that in the pin messages. All the lessons are there. You also lack the knowledge about market power, the red and the yellow moving averages. And yeah. Practice this on your demo accounts. Practice it, combine everything. we noticed that just from what we have been learning the past 2 weeks, we've definitely gotten better in our results. We have been that we have been taking on our demo accounts. Definitely, I've been receiving a lot of results from others, and they are way, way better than what we have actually been trading before we started taking classes, which is really good. The idea now is to get as accurate as possible. Maybe not like me right now, because it will take you time. This is my own strategy I developed. So that being said, it's in my fingertips. You might need a little, but the goal is to become like me one day, you know, or maybe better than me so that I could learn from you. That also said. So since we have a good amount of people right now in the class, I want to say one thing. Since there are a lot of new students that may have not read the regulations, please, one thing, right? One thing. Let's try to behave with each other in there. I won't call it group anymore. Let's call it academy, because normal chat and forex groups don't do what we are doing. Let's try to behave and treat each other in the academy with respect, with love, and with in peace. Let's try to live in peace. I'm not saying we are doing that. No, we have been really good to each other. I see people have been asking questions, others have been answering, which is really good. That's the first thing. Secondly, please don't belittle any other group, be it a free signal group, be it a VIP group, be it a trader that have been calling out trades in his or her VIP channel. Let's not belittle them, because there is no trader that does not lose trades. Everybody would lose a trade one day. You get it. And that being said, always think of how much money that trader has given you when things were good. You know, someday I'm also going to lose a trade. Someday, and it might be a really bad one. You get it, might be a really bad one. So let's always try to have mercy on others. Let's try to have mercy. Let's try to be understanding with people. I saw what I'm saying today actually happened today in the group. Someone said, I have a stupid, I think it was Mohammed, said, I have a stupid question. And someone said, if you don't know something, then it's not a stupid question. That's very nice, trying to motivate ourselves and pushing ourselves forward. That being said, please, 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 practice, practice, practice. Send your results, ask your questions. I might not answer all the time. I might not answer immediately. I have a lot. I receive a lot of messages, and sometimes it's good when you just try a different mentor. Just try Harvey or Ayon or Clinton. They also know most of the stuffs. They would be also they are ready to help you as well, and they will be able to help you. You know, if you have questions with the broker, how to sign in, how to put money in your broker's account. If you're really new in trading, please get to them so that I might have time for those that are advanced. You know, it makes no sense when I'm still trying to help you set your account when I'm actually there for advanced trading and getting way, way more professional. Also know that everything is for free. If any of the mentors charge you, know that he's trying to scam you. I'm not saying they are never going to do that, but I'm just saying, the reason I'm saying this is the knowledge you get here for free, the service you get here for free out of charity, you should be able to give it out as well for charity. You know, that's the point. That being said, I'm actually done for today. If you want me to give more examples, good and fine. We are on US 30, right? US 30. Everything is possible. Let me just check the market if there is something interesting. Thank you, sir. Enjoy the training. Who is actually attending classes for the first time? Who is actually with us for the first time? Oh, Bonnie. So, Bonnie, how was it? It's the same, it's the same. No. No, nothing good for now. So, okay, I'm just going to stop recording because